The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here noon till 1 p.m. every market day. Thank you to our great hosts, and let's just run the numbers because this is an important week. This could be one of the few weeks that the Dow actually closes down. We'll see. Right now, the Dow is at 23,423, down just 39 points. S&P is down 3.75 at 2580. The comp index is down 2 at 67.47. It's not going to take much to try to flip the whole market to the plus side, which is what has happened virtually every time for months when there's been a very sharp decline the previous day. I'll discuss some of the technicals in a moment because it's Technical Friday. But let's also say that the VIX index at this particular point is at 11.06. It's up 0.58 cents. So how the VIX closes today is going to give us a sense of whether or not there's buying by fund managers of insurance. So let's run the numbers. Here we go. INDU, the Dow down 40 at 23,421, under the 9-period moving average of 23,462. Yesterday, it landed right just like a fraction under the 9-period moving average, but if it closes under 23,462, today will be the first time that it's actually closed under the 9-period moving average since the breakout on the 11th of September above the 9-period moving average, where the day before we were in the 21,840s. The next day, you gap up, starting the day 21,927. That gap was never filled. All the gaps to the upside. There are a lot of gaps that are still open. And that is in the diamonds. In the Dow itself, usually the price, it's just that one IBM spike to the upside. I think that was on the 18th of October and was just partially filled. Usually the Dow index doesn't have gaps, but the diamonds can have a number of gaps. There you can see there's a gap right there. There's that, yep, that was the 18th. That was the IBM gap. Then there was one 3 days later. These gaps will be filled at some point. Now let's go to the S. So the Dow, let me just give you parameters to look for as we go into the weekend. And that will be on the upside. 23,460s is really very strong resistance. I'm not sure in this particular rally bounce, we put it into the bounce category, we can break above the 23,490s, very strong resistance there. But what I have said, and I told my subscribers to my opening call, one of the reasons why we have a couple of short positions in the Dow is that if there was a trade in the Dow for about 2 120-minute hours, that's like 240 minutes, but you could have a gap in between. So it's really, I want to see two candles trading below the midpoint of the wick. This is almost like a Chapman Wave Roman candle yesterday. So below 23,400, and we're very close to it. But if there's any point where it starts to close, there's a real good chance we're going to test the 23,310 level of yesterday, the low. S&P, SPX.X, the S&P is under the 9-period moving average, closed on the 9-period moving average yesterday. It's had one close since that huge move up back in September under the 9-period moving average. That was on October the 25th. And as we're looking at it right now, the MACD and stochastic, the MACD is very negative in both the Dow and the S&P. The stochastic here is still at 86%. That is good, above 80%, but it's turned down with the on-balance volume, which did not confirm the all-time high at 2597.02. That was on the 7th of November. So far, the 120-minute chart, let me show you better on the E-mini. Look, 120-minute chart made a peak, a right arm extension to 2594.50 a point above the previous high of the 7th of November. And on the 9th, it spiked up to 2594.50 and then pulled back very sharply to 2580, ran up, and it's in a peak B, making an arch pattern that looks like a lowercase h that goes to a lowercase m. So with that said, I'm just going to get rid of the 120-minute chart because in this particular instance, at 2583, that would be good action if the E-mini can do that. Under 25, if it go one more time, it goes under 25.75. That's a real problem. And we'll close. I wouldn't be surprised if then we would close at the low of the day. So this is going to be an important hour that we're looking at. So the E-mini is in a leg E/B in the weekly chart with good technicals. So what happens next week is going to be important because any close below 25.63 would suggest that the weekly chart could test 25.47. Interesting. Okay, so I want to go to the QQQ series. This is basically the index 100. Made a high of 153.29 3 days ago, broke under the 9-period moving average, and then bounced right back. It's got a way better chart pattern in terms of the technicals because the MACD and stochastic are still very strong as they are in the weekly chart. So it'll take a slide, starting with the semiconductor index, I'm sure, and we'll go into that in a moment, which is being helped at a plus 13 in NVIDIA. Not only was there a really good earnings report, it was perceived as spectacular because it's up 13 at 218.42 at an all-time high. That's helping a little bit, helping the semiconductor index, but not quite enough yet. So the QQQs have enough semiconductors in them that it's helping a little bit, but a close, it's 153.63. A close below 152 in the next 3 days would suggest, now there's a problem and there's a consolidation going on. A push above 153.29 would not only be positive, it would suggest that this week you could see even higher prices in the NDX 100 Power Shares Trust Series QQQs. Let's go to the IWM. Having a bit of a rally, up 34 cents at 147.01. It's had two green candles going into yesterday, and then today would be the third one, but this is the first one where it's used yesterday's close as a bouncing point to move higher. And at 146.99, up 31 cents. This is going to be very important because I've discussed for a long time the rotational aspect of this market. We might see that at some point over the coming weeks that there is a correction in the semiconductors and that maybe the oil stocks, which there seem to be a little bit more of in the Russell 2000, the IWM, maybe they have a bit of a counter-trend rally. Maybe finally we get a bounce in the IBB. We'll see, because that's how this market has worked. Until all the sectors are ready to go down in unison, having minus $180 in the Dow, followed the next day by minus 98, and the next day by minus 130. We haven't seen anything like that. And that's because of this rotational aspect. Wow, that is already the first commercial. All right, I'll be back. Basil Chapman, Dow is down 40, S&P is down 3.5. We'll get into the nitty-gritties on Technical Friday.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, we're back. So let's do this. So the IWM is having a bit of, I'm just calling it a bounce because the technicals and the data are still very poor. Weekly chart is still good. We're going to be watching that 9-period moving average supported at 146.90. It's at 146.88 right now. Here we go. We've got gold, which was doing okay, and then kaboom, it went kaplop at minus 11 at 1275.80. And one of the reasons I said that yesterday that we went a small position long in the gold miners, the GDX, I was skeptical. I wasn't sure I wanted to do it, but it seemed to me that the dollar needed a little bit of a rest, and that in the interim, because gold was holding and the dollar was holding, the GDX gold miners ETF was holding quite well 2 days ago. I thought, you know what? As a trade, we could put it on. Well, we went in at 22.99 and took a 29-cent stop. Yeah, wait a minute. Yeah, 29-cent stop. And so it's about just over 1% loss, and we're done. I feel I'm kind of done now with gold for a while. And you know what's interesting? Look, the dollar DXY, the dollar has come back a little bit at 94.43, down 2 cents, but it's making lower lows and lower highs. I got to watch that because the weekly chart is still very strong, but I did not want, 95.65. I really didn't want the 95.80s to be taken out, just chart pattern wise. It has been taken out, but we're now above it. We're 90. Did I say 90? 90. No, I'm sorry. 94.40s taken out, and it's now at 90.43, but it went down to 94.26. So it just snuck under by a little bit. And the reason why I didn't want to, because I thought that would turn the MACD negative, which it has. I thought the other way would have been a deflection back to the upside if by Monday we rally. We'll see what happens here because I think this market is becoming a lot more vulnerable. I'm surprised. I thought that gold, just a kind of a vulnerability thing, might rally here. So that's just the way it is because looking out, I believe the dollar still has internal strength. Even though it's had a huge smash from 103s down to the 91s, and now only trading at 94, just over 3.5 points higher, I think that the weekly chart is really saying to us that if it's able to hold on the weekly chart above 93.90s, I don't want to see it break 94. All of next week, That's going to be a good sign. And the euro dollar kind of confirms. Euro dollar yesterday had a single leg up. It's actually still up today. It's at 1.165. That is up 0.016. Yeah, it's okay. I still think the weekly chart, I should not have bought the gold because I wasn't convinced about it. It didn't have all the signals. And the weekly chart of the euro dollar currency pair just suggests there should be lower lows to come. And that, I think, is going to affect gold a little bit. And I think it's a little later on that gold really gets going. Is the JPY, that is the yen, US dollar to the yen. Peak G/C, still a G/C in the daily and a leg C in the weekly. And there the technicals are also pretty darn good. So 113 to 112.80 would be very important support for the yen, and a break above 114.50 is really needed. Sorry, 114.20 is needed to say that the trend is going back to the upside. Just quickly, we'll do crude oil. We've got some calls waiting. So we've got crude oil trading up. No, it was up a little. Now it's down minus 37 cents at 56.80, made a peak E. And I think we will stop there because we want to go straight to Greg in Austin, Texas. Greg, how are you?
I'm well, thank you. How are you?
I'm well, thank you. You'd like to look at?
Kush Bottles, KSHB. But I had an observation first.
Please give me your observation.
Well, I was watching gold this morning because I'm in Nugget, JNUG.
Okay.
But when gold started to move down this morning, I went and looked to see what time the London markets closed, and it started moving down about, 15 minutes before they closed, 15, 20 minutes before they closed. I was just wondering if that move down in gold could have occurred because they were closing out their positions before the weekend. What you might think about that.
Yeah, no. Fridays, I've noticed with gold, for a lot of Fridays over the last, it might be the year, but I'm thinking at least the last 3-4 months, so many strange things happen on a Friday in gold. And when you least expect it, you suddenly get these moves. Sometimes it was to the upside, and then sometimes it was to the downside, but it came maybe just exactly what you're talking about, sometime around noonish. So that's after the London market. And, my thinking there, since I've been out of gold for a long time, so I didn't watch it as if I owned it. If I owned it, I would know every little nook and cranny. This way, I'm just kind of observing. But what I have, in the back of my mind, I was thinking weekend cleaning up of the books, just trying to reconfigure, because Sunday nights at times have been quite volatile. And my suspicion was that there were dealers that were just kind of straightening out their books, just trying to get things organized so that either they were expecting volatility, which is what they wanted on Sunday night, or they were expecting nothing, or they were expecting that there could be a news event and they wanted to cover themselves. So that's the reason why I think it's the Friday phenomenon. But you could be correct there, and I don't, since I'm not really trading it all the time, it's just merely observations, and I can't even say the observations based every Friday, but I've noticed it enough times on a Friday. You were going to say?
Yeah. Maybe it'd be something to look at moving forward to see if that actually happens.
I tell you why
I might keep an eye on that.
I think you should keep an eye. And one of the reasons why it was just a little weird to me is because I was expecting that the dollar, and the question that Den is, are my subscribers still long the UUP, which is the dollar bull, the trading vehicle for the dollar. It's not the best vehicle, but it's the best we've got. So yes, we are still long because we were very fortunate in buying the exact day of the low. That's the 70-week low, the round trip, huge arch formation. So it gives us a little bit of a cushion, but my analysis kind of says that on a intermediate term basis, and for me, intermediate term is really looking at 6 weeks or more, I think that the dollar has more internal strength right now than gold. That's my thinking. It might change if the numbers change. So I was treating this more as a counter trend bounce. But now and the dollar didn't do very much. The dollar kind of ran up a little bit from the lows, but it didn't turn around like gold went down sharply. It didn't suddenly move up sharply. The day's young. Anything can happen, but it hasn't yet.
Right.
So that's my
Right.
observation there. I wanted to ask you, so what is Cush Bottles?
Oh, they make bottles for the marijuana industry.
Oh.
Yes. Yeah.
Good eye. Okay, now we've got a break coming on, and I am about to do a little more work on this. This is going to be
Okay.
very interesting. It had a spiral to 10 after the IPO, then went down to the ones, and now it's at 2.18. We'll be right back. Great
Okay,
caller,
I'll-
Greg and
I'll
Austin.
hold.
We'll be
Thank you.
back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So hi everyone, we're back. Dow's down 48, S&P's down 4.5, and we are on with Greg in Austin, Texas, and we are looking at KSHB. This is Cush Bottles Inc. And I quickly went to the site to see what they do. Of course, I couldn't get into the site because you've got to be over 21, actually. So it's got all the stuff that I've never seen before, but that's very interesting. And so, what are you doing with this?
Well,
I mean, what are you
actually, I
doing
was
with the
looking to
stock
buy
with
it
it?
this morning around that 212 area, about the 9 EMA on the daily.
Okay, correct,
Right at
right?
the open. Yeah, and then I went to probably go make a cup of coffee, and I came back and it moved up, and I thought, well, the market's moving down. I'll wait to see if it reaches.
Probably you went to make the wrong thing, huh? So,
Yeah, I did. And then it moved up, the market moved down. So I didn't get in today, but it looks like there's a lot of resistance at that 219.
Let me just do this, because I would not be surprised. I discussed this maybe a year and a half ago. Where was that GW? What was it? GW? What is that stock, pharmaceutical stock? GW something, GWPH? I can't remember. GWPH, yeah. Something like that. I remember when it came out, and then I said, at some point in the future, I don't know when, because there's got to be an initial enthusiasm, and then there's got to be some reality. But then at some point, I think making a portfolio of these stocks, and it should be a part of your portfolio, should be a portfolio of a portfolio. I would not be surprised if there's some of the winners within, and some of the losers might go broke. But I would not be surprised if some of the winners, a stock could be right now like this one at 211. It's already hit 10. So stocks that have IPOs with initial prices that skyrocket, at some point in their future, if they do things even just half right, tend to go towards that level. So that would be a fivefold gain from here. So that's looking at. The weekly chart has a rectangle formation very clear between the 3 level, and let me just get the exact figure. That was the high of 298 on the week of the 31st of March, and a low. I wouldn't be surprised if the low of 151 that was made in March won't be broken, that the low, most recent low in the 1.80 area, 1.81, 1.80 area, is really very, very strong support. So here's what I'm going to recommend. You missed out by, say, 4 or 5 cents. Yeah, on a percentage basis, that's 2% or more. I'm looking at this, and the way it's gone from peak A to peak B, stair set up, it comes back and retests the 9-period moving average. If you're prepared, now that you've missed the best entry, probably you shouldn't have as much, but if you're prepared to buy, let me just go to the 120-minute chart. I wouldn't be surprised if that's still early in its recent. So that went to, A, B, not quite C, could call it parallel. Yeah, you know what? I'm going to make the suggestion. You think about it, you don't have to dive in, but I'm going to say to you that KSHB, I think it's building a base. It could be in this period of where it goes from people experiment to see where it's going to go, to forming its own systematic series of lows that it treats as a base. Because I can tell you right now, if it closes under 1.80, then it's probably going to go very quickly to 161. But so far, for 2-3 months, it's been making the 180 level support. So I'm going to suggest to you, you could start a position. Perhaps it can't be as big as it was initially, but you could start a position here. This is the case where I wouldn't want to add it on a decline unless the decline was very gentle and it held the 200 period. You're looking at the 200 period SMA, which is at around about 212, 211. So that's kind of a base. If you start a position here and it rallies on Monday, that's a really good sign. It makes it a little more difficult to add to the position. But if you start a position here and Monday, it just gently pulls back and then hopefully closes at the high of the day, but it only pulls back to 216. That's a really good start. So I would say that's my impression right now, that if you got in at this particular level, it's made a rectangle formation, it's trying to work its way towards the 250s if my impression of the MACD and stochastic are correct. And I would just say, because you're starting a different position now than you would have if you got in at 212, a little smaller position, therefore I would give it a stop. I'd give it a little bit of room in the 212 to 210 area because of this position. And then let's talk again if you are able, if you're around, you can talk on Tuesday. I'd love to look at this again because it's going to be on my watch list as purely, absolutely, not only is it a speculative stock, it's an area that has been an IPO since it's not even a year. Yep, it is a year. January. It's not even a year. So this is a spec on a spec because it's an IPO in many senses of the word, because it's in an industry that has been around for thousands of years, but it's only been formalized as a stock market industry for a very short time. So yeah, I think you got a good eye for this. And do you, what I would say to you is, watch the level. If we don't speak and it's made a push above 233 to leg C in the daily, that is really good action. And what I would say to you is, if it's holding really well and it's at about 221, between 221 and 218 where it is now, Monday or Tuesday, and we haven't spoken, if it's holding well, I would even say you could add another small position, but that one should have maybe a 6-cent stop.
Okay, great. Thanks so much.
So, thank you for calling. Thank you for bringing it to my attention, Greg.
Good day.
Have a great weekend. Bye-bye. So, folks, what we're really looking at here, and this is in the den, there's a comment, stocks will be high. Yep. So what I'm looking at here is under the radar. It's a very important factor right now. That will be stocks that either have been hammered and are trying to make some kind of a turn. If you look at the RTH, I spoke about it yesterday when I was doing Tom's show between 3 and 5. Wow, look at that. I was looking at the RTH. I said it's had a really good move. This is the Market Vectors Retail ETF. You wouldn't believe it if you looked at some of these stocks, not these stocks, but the stocks in the, what was the question I just had? Could you look at, where did it go? It was the, I've got it right there. There it is. Would you look at DDS? So DDS is Dillard's. Or do you ever look at Dillard's? It's had a great move in going from the 50 area to the almost, went to 60, except now it's trading at 55. Dillard's I wouldn't touch. The next one you've got is FINL. That's the financials. What is it called? Oh, Finish Line, not financial. Finish Line. Finish Line is trading at 882. Wouldn't touch. JWN is a little different. There is a viable business there, but boy, they've been hurt so badly. They're touching the 200-period moving average in the monthly. That is, JWM is Nordstrom. I've only been in a few Nordstroms, and they always look very nice. I never see any people in them, in the ones I've been to. And then, of course, is the one that is really the most important, but I don't think it's part of the XRT, and that's Macy's, which is having a great day today. And I mentioned it yesterday, and I don't know why I forgot this morning to actually put it on our buy list, because I would not have got it, because it closed at the level it opened at, which was at 19.50, and that was the low today, so I would have missed it by a few cents. I'll be
Hi,
back.
folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Larry Pezzavento and John Jameson are teaming up for a live hour-long webinar Wednesday, November 15th at 5:30 p.m. Eastern Time, titled The Hidden Secrets Behind Trading and Investing in Cryptocurrencies. Cryptocurrencies are some of the most volatile trading markets in the world right now, and this is a webinar that you will not want to miss. In this live 60-minute webinar, John and Larry will discuss a variety of topics, including where cryptocurrencies trade and how to get started, how to recognize supply and demand in cryptocurrencies, and the difference between Bitcoin and Ethereum, and why knowing this one piece of information puts you in the top 1% of cryptocurrency traders, as well as many more topics. Visit the front page of TFNN.com for all the information and to sign up today for Fibonacci 24/7, and we'll see you Wednesday, November 15th for the hidden secrets behind trading and investing in cryptocurrencies. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So as I was saying, Macy's trading at 20.32, up 82 cents. That's a really nice, so that's a reconfiguration, huh? Wow. So this is very interesting because it took out that little gap, and now it's going for the next gap, and the high is 20.50 and the low of the 26 is 20.92. So that's a potential upside target. So what I was saying is, I looked at it last night, then I don't know what, I just completely forgot about it this morning. I meant to write it down, and I didn't. Let me write it down right now because it's something worth keeping an eye on. As one of the retailers that maybe could make a turnaround, we'll see. But most importantly is that it closed at 90.50, and the way the candle looked, I would have said try to get it closer towards 19.20 or 19. I'm not sure what the price would have been if I had remembered, and we would have missed it. So it opened at yesterday's close, and whoops, gone straight up to 20.36, and it's looking good. It looks partly like a short squeeze, partly like a new kind of trade, partly like a real estate potential. You remember Sears Holdings? Boy, what a hated stock. I don't know. I'd call this a short way back when I haven't got my notations anymore. I used to have them. But I remember talking about it back in 2007 as it made its high. And I said, I would not be so. I'm not prepared to short it, I said, because everyone keeps telling me that whatever his name is, I can't remember his name right now. The CEO is a master manipulator of the stock. I'm not talking illegally. I'm saying just the way he plays the stock. Eddie Lampert, that's it. And it can have, and I know that it had these surprise moves to the upside. You never expected it, and then for no reason, just suddenly one day, bam, up sharply 12%, and then comes down to a lower low, and then boom. So I haven't touched it, but what a short. I mean, it's at 462 now. There's almost, it's low. I mean, so I don't think Macy's is in the same category because Sears is not being handled. They've just never managed the company ever since it was the famous Sears and Roebuck. They even changed the name. How silly was that? But I still have the Sears and Roebuck toolbox with all those technical tools, the MACD, the stochastic, the RSI, etc. I love my Sears and Roebuck, huge toolbox. So Macy's, it's already on its way. I can see it going a little higher, and then it might have a single leg A. People realize, it's still Macy's, and it could be pulling back. We'll see if this is the real thing or not. The weekly chart says, hey, this is the start of an attempt to move up. It needs a lot more work. The monthly looks just terrible. Let's see what happens. It could be a perfect time. Maybe you're buying Macy's now, and in a year's time, Macy's is traveling up in the 50s. It used to be managed like that. I don't know if it's still being managed like that. Doesn't seem so. So, okay. a couple of questions. Let's just run them through. So that was the XRT, and the XRT is really not it's a great instrument right now because it's up from the low at about 38.70s, and now it's at 40.17. But the RTH is a way better instrument, and it has many more stocks, and they're doing well. I like the RTH, and this creates a big dichotomy for me. And this is one of the reasons why, in discussing the rotational aspect, I think it's really important. And one of the reasons why, my webinar, one of the reasons why I'm doing the webinar coming up on the 20th of December, Monday, 5 o'clock till 6 o'clock till 7:30. Let me see if I can get the front page. Go to the front page of TFNN, you'll see opening call subscriber event. It's for subscribers, but if you want to go to the webinar, you can get my newsletter for free for a month. You can sign up. Then you, of course, can get the webinar, and you'll be able to, it's archived for 30 days. Look at it as many times as you want. It's going to be really comprehensive, as all my webinars are. And what I'm going to be doing is I'm going to be discussing this whole rotational aspect. Is it possible that the semis, that the high techs actually take a break and they have this bit of a breather, which they really deserve? And lo and behold, all of a sudden, maybe because of the season coming up and everyone's pretty much written off all the retailers, maybe we're actually looking at a retail season, because people do love to go to malls. You can't find parking at the mall. They might not be buying, but they're going to the mall. So I'll be discussing that. So one of the things is, in the den, TJX, one of the great companies. I mean, they have, they have three fabulous. They have TJX. Oh, look at the chart. Not such a fabulous company. TJX bounced very nicely, coming off the double bottom with the 200-period moving average on the weekly. Hey, that's a good sign. So I'll need to do work, but TJX has Marshalls, and it has the home store, home something, and that's the top of the line. And I know, because I get schlepped to these places to go and have a look. Whether people buy it or it's not the point. The people go to look. So TJX is a great company. Let's see how it can handle the retail sales aspect. I still think that they won't be as bad in terms of this Christmas as people think. We'll see. Okay, enough with that. So the question is, next is the New York Stock Exchange, NYA. What is the actual question? New York Stock Exchange is trading at 12,311. I suspect that this candle that was made yesterday, if New York Stock Exchange starts to trade under 12,300 for about 2 120-minute bars, be careful, because the low that was made yesterday of 12,268, that's liable to be tested early next week if that happens. Upside has really strong resistance at 12,354. Weekly chart is starting to weaken, still good, but weaken. The daily chart looks terrible. BKX, let's go to the XLF, because that is the BKX index. XLF having a little bit of a bounce, but it's still down 2 cents from the low of yesterday, 26.15. This is going to be really important. So I had a question here. Someone asked me a question of, why did I not sell Bank of America when it hit the 27s, which was a fantastic, I mean, we were in at 23.46, and it zipped up to 27.98. Really nice percentage gain, 4 points. And the reason is that in my looking at the weekly and the monthly charts, my suspicion is, and I'm trying to put this together with the whole thing with yields, is that I think that the financials still have another big push to the upside. And remember, I spoke about Goldman Sachs. I don't know if it's ready right now, but Goldman Sachs should participate in that next big move. It did have quite a nice move from the 230s to the 240s, but I think that it'll be later on that Goldman really gets going. So yes, I probably should have. We did take a little bit off for a nice profit, but I'm trying to keep the core, because I don't know if we're going to get that position again. I don't want to really be going in and out. I just want to be holding and trying to assess the technicals, as if to say, in this case, Bank America looks to me in the weekly chart a peak E, oh boy, and the MACD is good, and stochastic's turning down, but still 93%. My eye says that the 25s, if it gets to 20, if it goes under 26, the 25.70 to 25.50 should be really strong support. Whether I'm still going to be holding it, I don't know. I'd like to. I like you because even the monthly is improving a lot technically. All right, enough with that. Let's go to the next question, which is Judy wants to know about ESV. ESV's ENSCO is in the oil service, I think. In leg C, it looks very good. In leg C in the daily, it's 6.20 ESV. Weekly chart leg C. Hey, this has support at 580. Looks like it wants to test 655. I like it. I'll be right back. Basil Chapman, Dow's up 47, S&P's up 4.70. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks, don't forget Steve Rhodes coming up straight after this great program, and then Dave White and Tom O'Brien. Yes. So at 6.09, down 9 cents. The question was ABEV, ABEV. Can you take a very quick look? And the daily count. So the daily count, it's not so much the daily count that I'm concerned about. What it's done is it's under the 9. It haven't been able to touch the 9-period moving average more than once since it broke down mid-October. And now it's about to test the 200-period exponential moving average at 6.09. But I do see a sign of positiveness in the stochastic rallying. Price hasn't really rallied, and the on-balance volume histogram is improving daily. So at 6.09. It's a peak E, very sharp pullback to the same thing, 200-period moving average support in the weekly chart, and it's a 9-period support. So this should, I don't know what they do, but this should be a good support area. I'm going to say to you, wait a day or two And let's see what happens. Let's talk again Monday or Tuesday. I'd be keeping this on my eye for a bounce. No more than a bounce right now, but a percentage bounce from 609 to 628. That's a nice bounce. But in the meantime, that's all I can expect. So I'm saying hold off. I don't think it's worth jumping in right now at 609. I'd rather buy a little bit, either another test of the 200 period or a touch of strength here to see if it can go above today's high. So hold off, but keep it on your radar because it's getting closer to at least a decent bounce. Next question was a quick question about race, which is Ferrari. Now, in my webinar, I'm going to be discussing something about automobiles, mustaches, a whole bunch of things that you don't often hear about in the stock market. Race made it top. This is Ferrari at 121.14 on the 1st of November, pulling back sharply. These are my key stocks that I watch, socioeconomic stocks. Cintas has been coming down since late October. And the IYT, the transportation index, is not good at all. And this divergence says to me there's limited upside at this point, but downside, we should start to make lower lows slowly but surely. Now, I spoke about NVIDIA a lot yesterday. It had earnings that must have been spectacular because it's up 11 points. I'm watching this closely because the SMHs, if you look at the different stocks within the sector and the SMH itself, the semi didn't break out to a new high today. It's got a high of a peak F at 104.40. I think that semiconductor is rather vulnerable to some kind of consolidation, not a crash, but a consolidation. We're going to be watching this closely. Have a wonderful weekend. Stay tuned for Steve Rhodes, and check the front page for my webinar.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.